Are you ready to discover how to turn affordable stocks into a powerful income generating machine? In this video, we'll dive into the top stocks under $20 that are perfect for running the wheel strategy, a low risk options trading approach that can help you build financial freedom. So, whether you're a seasoned investor or are just starting out, stick around as I reveal my favorite picks that can help you redefine your portfolio's potential. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family if it would help them in their financial journey. And it also helps the channel grow. If you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. So, with that said, let's dive in and get started. For those of you not familiar with the wheel strategy is an options trading strategy where you sell cash secured put options on a stock at a set price for a set time. At expiration, if the price of the stock drops below your strike price, you are then assigned the shares for that stock. Once you are assigned shares of that stock, you can start selling covered calls on those shares to collect additional income and finally profiting from the stock price appreciation when your shares are called away. So technically, you make income in three ways running the wheel strategy. First, by selling cash secured put options, then by making additional premium on selling covered calls once you are assigned, and finally profiting from the stock price appreciation. Now, with that said, let's go ahead with my first picks for the best stocks to run the wheel strategy under $20. So my first pick is none other than SoFi Technologies, and I can confidently say that it's probably one of the best stocks that is trading under $20 to run the wheel strategy. So for those of you who are not familiar with SoFi Technologies, SoFi is a fintech company that does a bunch of things from personal loans to online banking to mortgage loans, student loan refinancing, investing, private student loans, credit card, insurance, and even some travel. So looking at the SoFi year-to-date chart, it's up 10% year-to-date. And looking at the one-year chart, it's actually up 157% in the past 1 year. So it's looking pretty good. Looking at some key stats, it has a market cap of 18.26 billion and a PE ratio of 3767. The S&P PE ratio is around 25-26. So a PE ratio of 37 or $38 is actually pretty good for a growth company. Let's look at its financial performance next. So if you look at Q1 2024 versus Q1 2025, at Q1 2024, it had a revenue of 908 million. And then right now, with its latest earning release, it now has a revenue of almost 1.04 billion and a net margin of 6.8%. Looking at earnings per share, it's been beating analyst expectations quarter over quarter, including the last one where analysts were expecting EPS to be 3 cents and the actual earnings per share ended up being 6 cents. So let's look at where the stock is trading right now. It's currently at 1651, and in the last few weeks, it has risen up with the rest of the market. We have a max analyst forecast of about $20 on the upside. And then on the low side, I think this is a bit extreme, but on the low side, we have a 1 year forecast of $6, with the average price being $14. So as you can see, it's currently trading slightly higher than the average analyst price target of $14. Next, I have the SoFi 6-month chart pulled up on Thinkorswim, and looking at the current price, it's around the 1650 price point and at the top of its Bollinger Band. For those not familiar with the Bollinger Band, it's a technical analysis tool, and the stock generally tends to remain within the Bollinger Band 95% of the times. In instances where it pops out of the Bollinger Band, it generally reverts back pretty quickly. So as you can see with SoFi trading at the top of its Bollinger Band, again, if I were to take an entry at this point, I would look at some support levels. Right now, since it's been climbing up back to back, and these are the last 4 days, it's been climbing up pretty strongly along with the rest of the market. So the first support level I see is this 1450 level, which is the middle of the Bollinger Band. So let's pull up the options chain and see how much premium we can collect. We can go out to the August 1st options chain, which is 36 days out. Let's see right here how much premium we could collect with this 1450 price point. So the 1450 strike price is currently offering premium of 51 cents or $51 per options contract. So if we take $51 and then divide it by the strike price of 14.50, $14.50 times 100 shares is $1,450. So that's what I'm doing right here. And then times it 100 to get to the actual percentage. So that's a return of 3.5%. Now, again, we're going 36 days out. So even if you were to reduce this a little bit, it would be maybe a 3.3% return or 3.25 return, which is pretty good. I generally target monthly returns anywhere from the 3 to 5% range. So that's pretty good. My next pick is Lyft Technologies, and I'm sure all of you are familiar with Lyft, at least in the United States. It's a ride-share service just like Uber. Looking at its year-to-date chart, it's up 21% year-to-date and up almost 19% in the past 1 year. So the chart's looking pretty solid. Lyft held its first driver autonomous forum to involve drivers in planning for robotaxis. Well, everybody's focusing on robotaxis these days, from Tesla to Uber to Waymo to WeRide. So Lyft doesn't want to be left behind. They're trying to get in the autonomous vehicles and robotaxis, and hopefully that should help Lyft compete with the rest of the competition. It has a market cap of 6.67 billion and the PE ratio is 116. I believe it's a bit high, but we generally see high PE ratios for growth companies. Coming down to its financials, it recently just turned profitable. Now, looking at Q1 24, the net margins were negative 2.4%. And then in Q2 2024, it turned positive right here, small net margin of 0.35%. And then it turned negative again in Q3 of 2024. Now, Q4 2024, we see a nice jump from being negative to almost positive 4% on the net margin. This is where it turned profitable. And with its latest earnings for Q1 2025 earlier this year, it continued to stay positive. So I believe it's actually a good stock under $20 to run the wheel strategy at the moment. Let's look at some analyst targets on the stock. Again, currently trading at 1587. We have a max 1 year forecast target of 2130 on the upside. And then on the downside, we have a minimum price forecast of about $10, with the average price target being around $17.13. So there's definitely a little upside from where it's trading currently. And if we come down and then look at the overall analyst ratings, it's currently a buy. So I think this would make a good pick to run the wheel strategy. Let's check out its 6-month chart here on Thinkorswim. It's currently trading around the top of its Bollinger Band. Pretty much the majority of the stock market is actually trading close to the top of its Bollinger Band, and then Lyft is no surprise. If I'm going to go and sell put options on Lyft, the bottom wick of this candle is close to the middle of the Bollinger Band. So I'd like to go a bit lower, assuming I'm going to sell put options about 30 days out. We have a gap fill from the bottom of this wick, 1530, to the top of this candle, which is $15. So I feel comfortable going for that $15 level because we have a lot of support at this $15 level. So I'm going to go out to the options chain and we can go 30 days out to the July 25th options chain. And as I said, I like the $15 level because there's a lot of support there. And right now it's offering us a premium of $37 at that level. So let's see how much that comes out to. So $37 divided by 1500, which is the $15 strike price times 100. And that gives you a return of almost 2.46%, a bit lower than the 3% that I generally like to target, but still pretty decent considering the stock is actually at the top of its Bollinger Band. And generally speaking, when the stocks are really green and you sell put options, you generally tend to get less premiums when you were to sell put options on a stock on a red day. So considering that, I think a 2.5% return 30 days out is pretty good. My next pick is Ford Motor Company, and Ford's currently trading at 1061 today. Looking at the year-to-date chart, it's actually up 7%, but on a year-to-year basis, it's actually down 11.66%. Nonetheless, Ford's not going anywhere. And if you're just starting out and you have a small account and just want to get comfortable with the wheel strategy, it's still a pretty decent stock to run the wheel strategy. Looking at some key facts today, Ford Motor is reassessing its production plans due to tariff uncertainties, obviously retooling plants or moving manufacturing plants abroad to control costs. With the impact of tariffs, a lot of companies have had to readjust their positions, especially in the automobile sector. Looking at some key stats, Ford has a market cap of 42.19 billion and a PE ratio of 8.6, which is again compared to the S&P 500, is pretty decent. Looking at its financial performance, I see the revenue has been pretty stable in the 40 billion range. The latest Q1 earnings came in at 40 billion with a net income of 471 million. The net margin is just 1%, but I don't believe Ford's going anywhere. So having said that, I still think it's a good stock to run the wheel strategy. Let's look at its 1 year forecast and see how it's looking. So currently trading at 1061, we have a max target of $14 on the upside, and we have a minimum target of $18 on the downside, and the average price target being $9.82, which is slightly lower than the current price. So looking at analyst ratings, right now they're holding Ford at a neutral rating, meaning it's not looking fantastic, but it's not bad either. So looking at Ford's 6-month chart right here, we have Ford trading around 1062, which is right in the dead center of the top and the middle of the Bollinger Band. So the next level of support that I see is actually this 200 moving average support. And the 200 moving average is a very strong level for any stock. So for Ford, we have the 200-day moving average at a strike price of 1025, or we have the bottom of the Bollinger Band, which is a $10 strike price. So let's go over to the options chain. And again, we can go 30 days out or the next one, which is 36 days out, and see how much we can collect. Now, with the $10 strike price, which was the bottom of the Bollinger Band, right now you're getting $20 by putting up a collateral of 1,000, which is the $10 strike price. So again, that's a 2% return. The premium's not the best on Ford, but nonetheless, it's a stable company. And if you want to get, it's a fairly safe stock to trade wheel strategy. My final pick for this video is American Airlines. American Airlines is actually currently trading at 1122. And as you may know, the airline industry as a whole has been under tremendous pressure since the beginning of the year. We've also had a lot of air traffic incidents. Overall, if you look at the 1 year chart, it's up about 1.5%. But year to date, with everything going on, the stock is actually down about 36%. American Airlines has a market cap of 7.4 billion with a PE ratio of 13.13. Looking at the financials, the revenue has ranged between the 12.5 billion to the 13.6 billion range, and the net margins have obviously been up and down. And with the latest Q1 earnings, they reported a negative net margin of 3.77%. Looking at its earnings per share, they have been beating analysts' expectations quarter over quarter, even with the latest Q1 predictions, where the analysts were forecasting a loss of 69 cents per share, but the actual earnings per share came in a little lower at a negative 59 cents per share. Looking at analyst ratings, let's look at the 1 year forecast and see where we stand. So currently trading at 1122, we have a max upside potential of $20, and we have a minimum downside of a price target of $8. With the average price target being $13.56, we definitely have some more room towards the upside. Overall, analyst ratings still continue to be a buy, even with everything that's going on. So again, fairly decent stock to run the wheel strategy. Looking at its 6-month chart, it's currently trading right in the middle of the Bollinger Band. So if I were to sell put options about 30 days out, I'm going to target the bottom of the Bollinger Band, which is right now a price of $10.30. So let's pull up the options chain and see. I'm going to go to this August 1st option chain, which is about 36 days out. So we have the $10 strike price, which was the bottom of the Bollinger Band. The bottom of the Bollinger Band actually was $10.32. So that would fall right in between the $10 strike price and the $10.50 strike price. Now, the $10 strike price is a delta of 22, and the $10.50 strike price is a delta of 31. So based on your risk tolerance, I would go with whichever strike price works for you. So if we go with the $10 strike price and collect a premium of $26, that would be a return of 2.6%. But because we went 36 days out, it would be a bit lower if you were to do a return for 30 days. Now, if you go with the 10.5 strike price, obviously it's much better, collecting a premium of $40. So $40 divided by 1050, which is the 1050 strike price, is actually a return of 3.8%, which is pretty awesome. But again, comes with a higher risk. So depending on your risk profile, I would choose the strike price that works best for you. So that's it for this video. If you enjoyed it and learned anything useful, please give it a thumbs up, subscribe to my channel, and leave your comments below with any thoughts or feedback. If you'd like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.